Hey, it's Steve Zonardo here with Remax West Zonardo Associates. Just a real quick update on the market. Current units available, 10,000 mark. We finally hit the 10,000 units coming into the ending of February, going into March. We had 1,029 sales. So again, look at the ratio: 10,000 inventory, 1,000 sales. We haven't had 1,000 sales in quite a while in one given week. So it's 10% of the inventory getting swallowed up. So the market's definitely flowing. For us as a business, we're taking a few listings this week. We did a sale over the weekend that was negotiated from well over for 2 weeks, even 3 weeks for that matter. We had a few offers in, couldn't get the buyers to a certain point on other offers. We used one offer to leverage another buyer, and then ultimately we get to a conclusion. Just waiting for a few more things to get finalized, but that'll be the largest sale of my career, to be honest, which is awesome to, going into 2023. Just to read a few articles here. So experts react to January home sales, which dropped 31%. I get what they're saying, right? Like they dropped 31% from the year prior, but that's an anomaly year. Forget about it. If you kind of look at what's just happening here in our statistics, look what happened between December and January. Very, very, very similar statistics. If you kind of look here, the number of sales. But if you kind of look at the sale pricing here, we've gone up an extra $20,000 in the average sales here just in York region. New listings, yes, it's been doubled for sure. Active listings, again, we're at 1,600 units. I guess that's for the whole month of January. But you kind of look here, if you're running a business, this is what you want to be into. And if you see the biggest gains in average sales price, it's going to be houses or products with less inventory. So if you kind of look at the detached property, we got 3 months of inventory. You get into semi-detached properties, we only have 1.1 months of inventory, and I believe also the townhouses are lower too, so 2.1 months of inventory. So if you kind of see here, these are our biggest gains between towns and semi-detaches going up in value. Just for example, look at this. This is the month of January, so that was last month. $1,085,000 for a semi-detached was the average sales price, and in December was $1,040,000. So it's gone up like $45,000, which is probably like 4%, something like that, 4 or 5%, I would imagine. Let me just do quick math. Let's see, for 1085 over 1040, yeah, about 4%, 4.3%. So that's basically there. And then if you get into townhouses, December was $1,096,000, and now we're at $1,099,000. So not much, improvement there. For detached properties, this sank a bit, just 20 grand. But again, that's based off the months of inventory. So even though they're freaking out about this, the drop in housing, which is it's a great clickbait title. We've had a very robust January, thinking about all the interest rate hikes and inflation. Like, it doesn't even make sense to me. Going forward, going into inflation here. So Canada's inflation rate is expected to fall significantly this year, and we all agree. Just remember what I said going into this, early of last year, where it's basically we're going to start pulling back a year prior to a federal election. This is historic, guys. If we kind of look at data and history, this is what happens. So look what this says here, conveniently. So looking ahead, the Bank of Canada is forecasting inflation will fall to about 3% by mid-year and back down to 2% in 2024, 1 year prior to a federal election. Well, there you go. This is what's going to happen. They're going to bring it down a year prior. They're going to start, building confidence in the market. You're going to forget about the bullshit that's going to happen this year, because this year is going to be painful. I don't, a lot of people don't think it's going to be, but I still going to double down on what I said earlier of last year, where this is going to be a year to remember. And it's coming out of the gate, we're really hot. Like, we would have figured it was December, how we're tailoring down, and then ultimately January should have dropped more. But it looks like we've spurred, and there's some optimism in the market, and it shows with the sales that we're doing, because we unloaded 4 properties that were for sale for 6 months, and we could not move, adjusting prices, and all in January we started getting into offers. I even sold 2 of my building lots in January, which we couldn't get them sold forever. I had them listed even in March, and couldn't get them done at that point. We sold them conditional a few times, but couldn't get them moved. That's that. This is interesting. So look at the lumber costs. So So look where we are at now. We're at 395 feet $395 per linear board foot, or it's 1 square foot. I forgot how they measure it. So it's 12 by 12 inches. So one board foot is 395 USD. Okay, drop at the lowest. It was Feb 23rd at 372. But look at when we started this year here, year to date here. So we started low coming in, and then we had this robust jump up again. This robust lumber cost jump up to 5.25. Now we're swinging down. So we're at 395 now. Let's look back. Let's say 3 years. Is that going to pass the pandemic? No. Can't believe it's so long ago. Well, look at this. So 2019, this is basically what a linear or a 1 board foot of lumber would cost. It was usually between like the 300, 400 range. You had some slight, ups and downs. Nothing crazy. Nothing was going to offset your expenses, especially if you're building a house, if you're a builder. Because I know in Toronto, a lot of builders got hurt when roof trusses, for example, would have cost you $30,000 or $40,000 normally, and then they went up to about $120,000, and obviously that comes out of the bottom line, and there's no more profit to be made at that point. But let's look what happens into this is COVID naturally, March 30th, 2020. Then we get this crazy influx, boom, up to 900 by August, then back down a bit, and then this huge peak in May of 2021, back down again into August of 21, and then again, big peak, $1,200 a linear board foot. This is like $1,600, imagine that. But now we're back down to that 300 to 400 mark, so that looks pretty normal going forward, which is good, obviously, if you're a developer. Stock markets too is starting to collapse, right? We got all this gain here between COVID and inflation. Remember, a lot of cheap money was printed, a lot of cheap money was given out, so a lot of that money was dumped into the stock market. Now it's starting to get pulled out because that money's costing too much if it's been borrowed, and the inflation, obviously the interest rate. So now people are pulling out quite quickly, and now where are we at now? 12,687. We closed, when was that? Feb 13. And today we are 12,000 units. Yeah, so pretty much it. So it looks like the market is going in the direction of where we're going to see a recession. We actually pulled money out of the stock market earlier this year and just stuffed the money into a GIC. I mean, they're paying 4%. Why not? It's locked in. It's better to be making money than losing money, especially if you can buy back at a lower price. And this is my thought process with real estate. Why would I allow my long-term benefits of holding real estate, dealing with the BS of tenants, mortgages, insurance, and all the liabilities associated with renting properties? Why would I let it get taken away from me? Unload the properties, keep the money in cash, put them in a GIC. At least it's making some return on investments, not what we normally would get with dealing with real estate, but at least it's in an upward trend rather than a downward trend. When the market gets to a bottom, when I feel it's at the bottom, buy back in. Like it's just simple. I think we overcomplicate things with the way you investing. I think this is the way to do it. Currently, right now, I always advise this: be sitting on your hands. Even though I'm hyper ADD and I want to be buying something at all times, but ultimately it's time to sit on your hands just currently and keep it going. We are obviously bullish here in Florida. We're doing more business here right now with investing because it makes more sense going forward, because everything is a positive cash flow. Even if the market did correct a bit here, which it won't compared to other states of America, we'll be safe because of the passive income that will be produced by these properties. So we're still very bullish on Florida. And if that changes, I'll tell you the truth. But right now, this is going well. We will talk soon, guys. Have a great day. Ciao.